Hello, this is the TradeSet US Stocks and Futures Market Preview for the week beginning Sunday, the 15th of October, 2023, ending Friday the 20th. This is options expiration week for October. It's just a monthly contract expiration. It is not a triple expiration. Here's a look at the dollar index. So we'll start with this, even though we don't really do the Forex stuff directly anymore. We're doing futures only. Um, Basically a dead flat week, nothing here. Here's the pound futures. Moved up, then came back down, close about where they opened. Here's the euro, not much of a week again. It's the inverse of the dollar index. Here's the ES front month futures contract. This is the daily chart of the broad market in futures form. And what you see here is that we didn't go much this week at all, basically closed about where we opened. We'll look at that on the intraday charts in a few minutes. But overall, there was no headway made at all, and there's no counts, there's no chart patterns, there's nothing that we need to address or deal with. Here's the S&P cash. Again, nothing here either. Basically the same as the ES contract. NASDAQ 100, 14,995. Again, same thing, closed about where it opened for the week. We'll look at that in a moment. Dead flat, no counts, no chart patterns, nothing here to look at. The Russell, on the other hand, has an inverted cup and handle forming, and if we break the lows, this is not good. Remember, this is the smaller cap stocks, things that usually drive the economy forward, and this is breaking down new lows potentially. This is going to be they're subject to more problems with the interest rate issues. So the fact that this might break the lows is not a good sign for the economy, obviously, as it'll slow down and stifle what's going on in general. The crude oil numbers. Crude pulled back to 82.81. It hit as high as 96, 95, let's call it. Obviously, the situation in the Middle East has not had a major impact here on crude oil. It's actually so far helped us, not helped us, but the price of oil has gone down and helped us after spiking up. But we'll see where that leads to. Gold gapped up on Friday a bit, but generally speaking, sitting at lows. So this is also very interesting because with all the inflationary numbers, you would expect there to be something going on with gold, and obviously we're at lows, so that is not happening. Here's a look at Bitcoin, and this is the pure Bitcoin itself, 26,847. So this has been here since back in March, so there's nothing going on there as well. TLT, the 20-year bond ETF. Bonds down, rates up, as they say. This thing has been making lows. It made new lows back on Monday, but then came back a bit this week. So is that a bottom? I don't know. There's no counts. Again, no signals, no charts, no counts. So if we made a couple new lows, we would get a 13 buy signal off of that seeker count that you're at 7 on. That might be more interesting, but so far nothing there. The VIX spiked on Friday in particular, a little bit on Thursday. Markets have been very tame compared to what you would expect given what's going on in the Middle East, but the VIX at 19.28. So again, we like to see this. This suggests volatility. We're out of summer maybe. We're at the time of year where the markets usually move one way or the other. Honestly, usually down at this time of year, but we'll see what happens. So this is a good sign for those who like to make money in the markets, and obviously you got to be able to trade both ways and see what happens. Advanced decline ratio on the New York is here. Negative 733 on Friday. It was way worse, almost negative 2,000 on Thursday. Positive on Wednesday, negative barely on Tuesday, and barely positive on Monday. So the Thursday was the big negative day. The trend closes the session at 0.71, puts the 10-day moving average at 0.98. That's above the 0.85 blue line for the 10-day moving average, so there's no sell signal here on the broad market or anything we need to worry about yet, but we will be dropping off a fairly big number, I think. 1, 2, 3, 4, 5, 6, 7, 8, 9. I think we're dropping off a big number after Monday, and if we get a low reading after that, that could drop that 10-day moving average pretty quickly, and if you get under 0.85, like I said, that's a big sell signal in the market. Now, here's the ES 10-minute candles, and as you can tell, far left side of the chart is Friday, and we basically closed where we opened. So Monday, a small gap down, didn't do much, filled the gap, went a little higher. Tuesday, small gap up, pushed higher, then came back, dead flat in the afternoon. Wednesday, small gap up, just drifted lower, filled the gap, and then drifted back up late in the day. Thursday, basically, and this is really interesting, small gap down that didn't fill in the morning, filled right over lunch, barely, and then went lower, and then late in the day came back up. Friday, small gap up, sold off, and whatever. So no gaps left behind, as you see, and literally, I think we're up like 4 points for the week on the S&P. NASDAQ basically closed where it closed last Friday. So it was basically a big wasted week in the markets from that perspective. Here's a look at Apple. Again, we're looking for chart patterns and counts. Counts, nothing here except for 9 bars up, but not a massive sell signal. There's no chart pattern at all. Amazon, same situation. It was down $2.73 on Friday, but no counts, no sell signal. Meta made new highs on Thursday, all week and then on Thursday, but then everything sold off on Friday a bit. The major techs definitely did. Google, same thing, made new highs forever on Thursday, but sold off on Friday. Goldman Sachs, not much here from that perspective. Netflix sold off more this week, down below where it opened. One of the few stocks that did that. Tesla closed about where it opened for the week and has been just sitting here for now 5 months. Nvidia, same thing, same price as 4 months ago. And Zoom, a little bit more negative. Now this thing cracks the lows under 61, 60 and a half, whatever that is. That's a nice inverted base formation, so we'll see what happens. But that would not be a positive for the markets. All right, so that's what we're looking at across the board. But obviously the big situation is the news and what's going on in the markets. And you can't really get beyond that. We have the options expiration on Friday, which means potentially options unraveling on Wednesday, maybe Thursday. Monday, we've got the U.S. dollar index at 8:30 a.m. Eastern time. Trade balance out of Europe is before that, by the way. The federal budget balance number comes out at some point. We got some Fed members speaking. Then you go to Tuesday. You've got the CPI and housing starts out of Canada. But retail sales here in the U.S. at 8:30 a.m. Eastern Time, capacity utilization and industrial production at 9:15 a.m., business inventories at 10, NAHB housing market index at 10, tick long-term purchases right at the close. China releases their GDP numbers if they're even to be believed at that point. Wednesday, UK's got their inflationary numbers. We got the CPI, PPI, and RPI all at once at 2 a.m. Eastern Time. Followed by the broader CPI number out of all of Europe. And then here in the U.S., housing starts and building permits at 8:30, crude oil inventories at 10:30. A lot of Fed members speaking, like 4 of them that day, 5 of them, sorry. Fed Beige Book at 2 p.m. Eastern Time. Trade balance out of Japan. Australia's got their employment change and unemployment rate. Swiss trade balance at 2 a.m. Eastern Time on Thursday. Unemployment claims and Philly Fed manufacturing index at 8:30 here in the U.S. on Thursday. Existing home sales at 10 a.m. CB leading index at 10 a.m. Natty gas at 10:30. Fed Chair Powell speaks, and again 3 more Fed members speaking. So a lot of Fed speak this week. And then on Friday, U.S., there's no data at all, actually. Retail sales out of Canada, but nothing here. So Friday's going to be a bust. And remember, that's options expiration. So wouldn't expect much out of that. Now, with all the budget stuff, with all the problems out of the House of Representatives, and not having a leader, and what's going on in the Middle East, you would think there's some stuff going on. Obviously, rates are spiking from a mortgage perspective. So there's just a lot of things that are, really, to be honest, fairly negative against the market right now, except for the employment numbers, which keep getting stronger and stronger and stronger, it feels like. So I don't know if that's going to hold the market up as we head into the holidays and everything else behind it. Let's take a look at the calendar ahead. So the next major holiday here, we've got a full week this week, a full week next week, a full week the week after that takes us into November, a full week after that, a full week after that. And then you've got the Thanksgiving holiday on the 23rd of November. That's that short week where everybody usually leaves and packs up and goes traveling on Wednesday. Thursday's Thanksgiving, we're closed. Friday's a half day. Nobody trades if they have a brain. And then Monday, Tuesday. And then we have another month of straight trading and 4 good weeks, 4 solid full weeks. And then Christmas this year is on a Monday, so that'll be the holiday. Christmas Eve is on a Friday, so there's no extra half day. And the same will be true following that, which is that The last full day of the year always has to be a full day anyways, which is the 29th. So New Year's Eve is Sunday the 31st, and then we'll have Monday. This is actually one of my favorite holiday schedules for the market because Monday the 1st of January will be the holiday, but then from there we just get started. There's no like 2 days or anything like that where people are just still on vacation. It's a full week except for Monday, and we move on from there. So charts as usual brought to you by Ninja Trader. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week.